Big Bear was up 58% last week. It's up 91% in the last month and 165% in the last 3 months. So this AI stock is surging. It's looking extremely bullish right now, and it has broken out in the last 2 weeks, surging tremendously. So in this video, I'm going to offer a price analysis for Big Bear, a future trade entry potentially next week for this stock, and also offer some thoughts on trade management if you're already in this stock at $6. Let's take a look. I'd like to thank the Motley Fool for sponsoring this video. Visit fool.com/DavidB for the 5 best stocks to buy now. Use my special link to get $200 off their epic annual subscription. Now, if you find value in my analysis of Big Bear stock today or other stocks on my channel, you might also find value in my trading tips newsletter. If you subscribe, I'll send you professional trading tips direct to your inbox to help you make more profits trading stocks. I'll leave a link in the description below. Check it out. So Big Bear last week had another bullish week. And you can see on screen, looking at the weekly chart, Big Bear has increased over 122% in the last 2 weeks overall, with last week being a shorter week, not having a trading day on Friday. So this stock is looking very bullish. It does look as if it wants to move higher and reach that $10 target. Since the peak in February this year, Big Bear has been sold off considerably. It actually dropped around 77% into this significant low, which was created in the second week of April. Now, since this significant price trough here, we can see Big Bear started to move up. On the weekly chart, we can see the price was making higher highs and higher lows, confirming the trend was moving up. And you can see I've added this orange trend line just to confirm that price is moving up since that trough here. A big reversal bar, it did then pull back slightly, created a higher high. It then pulled back to make a higher base. And you can see since this point here in this week in the 23rd of June commencing, a really massive breakout bar for Big Bear. And it's these last 2 weeks that have sent the stock surging, adding over 120% in the last 2 weeks. So a massive breakout for Big Bear, considering that from this point the trend was moving up quite sustainably. But you can see here in these last 2 weeks there's been massive volume, so lots of buyers coming in and the price has surged. So key levels for Big Bear to look out for. The all-time high is back here, which was made during April 2022. That's around $16. Then underneath that, we've got the price peak that was created this year in February, and that peak is this key level of $10. Underneath $10, we can also mark up this peak here with a line. This peak here is around about $6.72. Underneath that one, we've got another peak corresponding here to this date here in March 24. That's around $4.79. And then underneath that one, we've got this key level running across the price action here, where Big Bear's found support on multiple occasions. It's around about $1.14. You can see it's fell into support here, 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 and also here. So under the current price action, so nothing to worry about right now, but good for reference. And underneath that point, we've got the all-time low for Big Bear, which is down here at 57 cents. So based on these key price levels for Big Bear, we can see the current price of $7.75, that was the close last Thursday, is trading above this key level here of the peak, which is back here, and it's trading underneath this target level of $10. And above $10, we can see the most obvious target past this peak here is going to be the all-time high of 16. Now, of course, with such a big surge in the last 2 weeks, if you're not in Big Bear already, you might be thinking, should I buy now? Have I missed the boat? I don't think so. I think this stock is looking as if it wants to move towards $10. So even if you entered next week, there's still some decent profit to be made on a trade towards that $10 target. And if you look at the weekly chart for Big Bear, we can obviously see there's been two massive weeks for the stock, but overall, looking at the big picture and the price action, we've got one key level back here, which is this peak made in Feb 23. It's around about 678, 679. So actually, in terms of weekly rules, it was only last week, the 4-day trading week, that Big Bear traded through this key level and actually closed the other side. Very bullish. It closed well above it. So in terms of using weekly rules, you could say, okay, last week was the week that Big Bear closed above this key level. So a close above this key level is bullish. It shows the price wants to move higher and buyers want to take it above this level here and towards this higher level here. Therefore, you could enter the stock next week using that weekly rule. So if you wanted to take a trade next week using the weekly chart and that weekly rule, you could possibly enter next Monday. And if you get filled at last week's close on Thursday, so around 775, you could put your stop loss at the bottom of this bar here, which would equate to around 20%. And I think you need to have that stop at that 20% range. We know that Big Bear is volatile. We know that each week it can swing 10 to 20%. So I think anything less than 20% will be too tight and you risk getting stopped out. So 20% stop loss entering next Monday, and then you can target the $10 target up here. So that would give you a 33% upside potential, and based on that stop loss, a risk to reward of 1.7, which is acceptable. And if price does move up and reaches the $10 target, it is possible that if there's enough buying support, price will continue trending up, and potentially you could target the all-time high of $16. So over 100% upside over the medium term for this entry point. But we must remember, Big Bear is a volatile stock. It is being traded and people are speculating on it. So it is higher risk. So you have to get your rules right and you have to have good risk management. We know that price can swing 10-20% in a single week. And it's also possible for Big Bear to move much, much bigger than that. For example, this move up here in 1 week was 122%, so a massive move. Obviously, fantastic if you can catch this move on the upside, but there's also the risk that the price will do that towards the downside and you're going to lose. So risk management is critical for this stock. Now, because of the volatility of Big Bear, you might want to use the daily chart for entry rules and also trade management. And based on the price action last week, there was a rule triggered for an entry on the Thursday after confirmation on the Wednesday. So looking at the price action of Big Bear on the daily chart in detail, we can see the 24th of June, Tuesday, was a big day for Big Bear. It did move up, buyers came in. The next day, there was a price reversal with some selling pressure before there was another reversal bar on the 26th of June. Indecision on the Friday, the last session of the week, before Big Bear gapped up on the open on Monday, 30th of June, which was last Monday. There was some selling pressure on the next session Tuesday before buyers came back on the Wednesday and price traded up to make a new high of around 780, and it did close high. And then on the Thursday, it did push higher to reach 825, but there was some selling pressure in that short trading day, and it ended up closing lower down the bar at 775. So based on the price action last week, you could have entered on confirmation based on the following. Monday's price moved up, there was some selling and it moved down and closed about halfway. And then after this selling pressure, it did move back up again to create a new peak. And of course, because the sellers had to go here during Tuesday and then the buyers came back on Wednesday, price did elevate above this peak here that was made on the Monday. So based on Monday being bullish, Tuesday the sellers having a go, but then the buyers effectively muscling out the sellers on Wednesday session, you could have entered after price closed on the Wednesday high above this peak here, and then after this close you could have entered on the Thursday at market open on confirmation. So those are some options for entering on daily or weekly rules, potentially next week on the weekly chart. But what about if you're in the trade already with Big Bear and perhaps you entered at $6? So I want to share some tips with you now for that potential trade management. So we can see on screen here, I've got the Trading View tool with an entry at $6, and I've marked up a stop loss of around 21%, which correlates to 469. And remember, we need that 20% room for Big Bear to move because you know it is volatile. So anything less than that, you risk getting stopped out. It's not ideal, but this is the challenge when you trade these volatile stocks. And of course, entering at 6 with the target of that $10 line up here, we've got an initial risk to reward of 3.1 to 3.2. So you can see here, $6 entry, 20% stop loss, $10 target, risk to reward of 3.1. So based on that entry, a few weeks ago, you'd now be in profit. Based on Thursday's close at $7.75, which is obviously here, you'd be up almost 30% in profit, which is fantastic. And of course, you might want to sell the stock next week on market open and realize those profits, depending on your strategy. But if you want to stay in and try and work up towards that $10 target, it's probably now a good idea to potentially move your stop loss up. And one option would be to move that stop loss from the initial level here, 469, which is down here, to move it up towards break even. So potentially you can move your stop loss all the way up to here to $6. And that would be break even. I wouldn't recommend going higher than this. It is tempting to perhaps move the stop, higher up here to perhaps like $7. But we know that Big Bear is volatile. If we look at this bar here, for example, Big Bear had 3 bearish weeks, following this price peak here. This week, for example, it moved almost 25% to the downside in just 1 week. So it's volatile, it can move fast. So I think if you put your stop loss any higher than this $6 mark, you risk getting stopped out. So what we're saying effectively is, it's at $7.75 now. So even if it swings 20% next week, you're going to stay in the trade. Obviously, you're not going to realize any of that profit if it does pull back, but you're thinking about the bigger picture and potentially capturing that bigger move towards the $10 target. So it's a balance of risk management and future gains. So in summary, if you entered at 6, you could potentially move your stop loss to break even. You are up 29% in the moment, and moving that stop loss to $6 would allow a negative swing of 22%. So if it does pull back next week or the next few weeks, you're going to stay in the trade and potentially ride it up to $10. Of course, it's going to be up to you whether you follow this suggestion or you perhaps sell next Monday, realize that profit, and perhaps wait for a pullback and enter again. It's going to be up to you. So overall, Big Bear is looking bullish. It does look as if it wants to move towards $10. So I hope these tips in this video were helpful. Let me know in the comments what you think. Are you still bullish on Big Bear? Where did you enter? Did you enter at 6? Maybe you entered at 4 and you're in profit. Let me know in the comments. Thanks for watching.